Welcome to the channel Get Rich. Today we are going to look into a company analysis video. So we are going to analyze Supreme Industries Ltd. So we are going to look into what the company is doing and how the revenue they are getting it from their products, and we are going to look into what are the different ways they are bringing in money, and we are going to look into the financial statements of the company, and we are going to analyze the valuation of this particular company with the price target for 1 and 2 year. So let's get started. So the Supreme Industries Limited, what are they doing? So they are engaged in processing of polymers and resins into finished plastic products. So they have 30.78% stake in Supreme Petrochem Limited. So Supreme Petrochem Limited, they manufacture polystyrene, expanded polystyrene and extruded polystyrene foam, specialty polymer components and so on. So they are also having 30% stake in Supreme Petrochem Limited. And also they have only one subsidiary of Supreme Industries Overseas in the United Arab Emirates. So then if you have a look into their business highlights of Supreme Industries Limited, they are one of the largest plastic processor in India with a sale of above 4 lakh metric ton annually. They have presence in the Indian plastic industry for over 54 years under present management. So they have diversified revenue model with a large product portfolio across 4 verticals. They have 25 plants situated across India with an asset base of over 3,300 crores, and they are also doing 3 more plant expansion, the brownfield expansion with a capex of around 400 crores in 2021 to 2022. So if you look into the price chart of Supreme Industries Limited, they are doing pretty good in the recent years, and they reached all-time high of about 2,700 rupees, and currently they fell to about 2,000 rupees. So almost it fell 25% from its recent high. So let's see their business and the valuation, whether it's attractive to buy now or to stay away or to just hold. So then if you look at the PE ratio of Supreme Industries Limited, so their average PE ratio is somewhere about 24. So currently they are trading at around 23, 24 in forward basis, or 26 if you see in the trailing basis, and it even traded at some point 50 PE at certain times, and it mainly in the past 5 to 7 years they mainly traded somewhere between 23 and 50. So 23 is their bare minimum, so the average is 24, 25. So if you look into their business segment, they have 4 main business verticals. So the first one is plastic piping division. So they have pipes for different applications. They have consumer products like furnitures, and also they have packaging products is the third vertical. So they have specialty films, protective packaging products, cross laminated film products, and also they also have industrial products, so industrial component material handling devices and composite LPG cylinders. So if you look into their product portfolio in each of these categories, so the first one is plastic piping system. So they have PVC pipes, injection molding fittings, they have pipe systems for septic tanks, they have pipe systems for toilets, sewage systems and so on. So their main targeted customer segment is in water supply, irrigation, sewage and drainage, plumbing and sanitation, industrial pipe system, fire sprinkler system. And then they have consumer products, so mainly furniture, so it's household, office establishments and also institutions. And the third one is industrial products, so like industrial components, and they have material handling products like crates, pallets, bin and dust bins, so and also composite LPG cylinders. So their main application is in auto sector, electronic household appliances, water purification filters, soft drink companies, agriculture and fisheries. And they also have packaging products like specialty films and product packaging products, cross laminated film products. So their main application is in agriculture, floriculture, horticulture, grain storage and construction, automobiles, insulation, sport goods, food industry. So they have a lot of different applications from their plastic pipes and their different verticals. So then if you look into their revenue breakdown, how much revenue is coming from which segment, so almost 59% of their revenue is coming from plastic piping, and then 19% of their revenue is coming from packaging products, and then 14% of their revenue is coming from industrial products, and 7% of their revenue is coming from consumer products, and others account for 1%. So if you look into their previous quarters, how their revenue mix is evolving, so in Q1 financial year 2021 they had about 72.5% is coming from plastic piping. It now reduced to almost 59% in Q3 financial year 2022. So plastic piping percentage is decreasing, so maybe they are diversifying. That's good. So if you look into their other segment, for example, the second one is, I think, packaging products. It's increased from 17.8% to 19%, and then they have industrial products, which increased from 6.7% to 14%, and then their consumer products also increased from 2.7% to 7%. So it's good they are diversifying, but we also have to look into their margin, how these different segments have margin. So if you look into their EBITDA margin of this different segment, the smaller chart below, so there, for example, their plastic piping system always commands higher EBITDA margin, and the second comes packaging product. Sometimes it even commands higher margin than plastic piping, sometimes lower. So I would say packaging products and plastic pipings have a higher EBITDA margin, and then if you look into their industrial products, that doesn't have a high margin, it's a low margin compared to their other two segments. And also if you look into their consumer products, that's also lesser margin when compared with the other segments. So consumer products, so mainly the packaging products and plastic piping have higher margin, but the margin is differing. So sometimes some segments is giving higher margin, so it keeps on changing. But these two, plastic piping and packaging products, throughout the history, it has higher EBITDA margin. So then if you look into their plastic piping division, so they are the leading quality player with 8,774 products for 33 different applications. So they are having about 15% of the organized domestic plastic piping market. So they have 15% market share in the organized domestic plastic pipe market. And also if you look into the overall estimated market size, it's 42,000 crore, and the Supreme Industries share in 2020 to 2021 is 10%. So they have 10% overall market share and 15% market share in the organized domestic plastic piping market. So that's good. They are commenting a sizable chunk of market share in this particular segment. And if you look at their second segment, which is consumer product segment, so which is mainly furniture, so they are the second largest player in the plastic molded furniture with the current processing capacity of about 30,000 metric ton, I believe. And if you look into their market share, so their estimated market size is about 2,750 crores, and the Supreme Industries, which they have about 14% market share in 2020 to 2021. That's good. They are having a sizable chunk in this segment as well. And if you look at the packaging product segment, so they have the key categories are specialty films and the different products. We just looked into it. So the product range is thermoplastic, PE foam sheets and profiles, cross-linked and blended PE foams. So they are also having different customized products like anti-static, UV resistant and aluminum foil laminated foam and bubble film. So they have a lot of different product ranges in the packaging products as well. And if you look into their industrial product segment, so industrial product segment is the major player. So they have presence in water purification, electronic voting machine, and they are the major supplier to the soft drinks industry. So they have an estimated market size of about 2,000 crores in this segment, and their Supreme market share in 2020 to 2021 is about 12% market share. So they have somewhere between 10 to 14% in each of the segments. So that's great. So they have a sizable chunk of market share in all of the different segments. And if you look into their manufacturing locations, they have almost 23 manufacturing locations all over India. So they are also planning to expand their capacity. So the existing capacity to be enhanced to almost 8 lakh metric ton, I think, by 2022 and 2023, with a capex of around 750 to 850 crores in the next 2 years. So that's good. So they are looking to fund these projects based on internal accruals. So they don't want to take more debt. So that's good to see. And also if you look into their technical collaboration, so they are having a technical collaboration with Rossmann Polymer Development Switzerland for cross laminated films, and also Kautex GmbH for composite LPG cylinders, and also they have different company technical collaborations for some of their products. So that's also good. They are looking to innovate to give more products to the Indian market. And if you look into their value added products, so value added products are those though have operating margin is higher than 17%. So in 2019 to 20, they have about 38% share of specialty business, which is increased to 40% in 2021 2021. But if you look into different quarters, so in quarter 1 financial 2021 it was 35.9% or 36%. It increased to almost 41% in quarter 3 financial 2021, and then again it reduced to 34% in quarter 3 financial 2022. So their value added products are increased, but now again it fell a little bit in the downside. And then if you look at their financial statement, so if you look at their growth, revenue growth, they are growing phenomenal in the 2020 21. So in the recent years they are growing pretty good, but yeah, they are increasing their revenue, but their EBITDA was also increasing, but that now their EBITDA margin is fell in the recent quarters. In financial 2022 they are struggling with their margin. So in 2021 they had a very huge margin, phenomenal margin, and then in 2022 their margins reduced a lot. So I think going forward, the company and analysts, they are expecting margin to stay at this level, so it will not go back to 2021 levels, because it's I think it's a huge margin in 2021. So yeah, historically they were in the lower margin side, so now their margin is went down, and the analysts are expecting their margin to be stay around the same level as they are in 2022. So that's if we have in financial 2021 we have high base, and then 2022 and 2023, if we compare the base of 2021, then their profit growth or bottom line growth will be lesser than their historic growth, because they have one of higher margin in 2021. So that's something to be noted. And also if you look into their quarter over quarter financial statement, so if you see in March quarter, their operating margin was almost 24%. So historically they were doing 14, 16, 19%, and in December 2020 and March 2021, 22 and 24% operating margin, and then in June 2021 it again reduced to 17%. In September and December it was 16%. So historically they were doing around 16, 17%, and 22, 24 is like on the higher side. If you compare December 2020 and March 2021, they have 312 crores and 450 crores, but that cannot be sustained in the coming quarter, because their margins will be much lower, 16 to 17% going ahead. So that if we compare that particular quarter, 312 crores and 450 crores bottom line in quarter, it will take some more time to get to that level for them, because with the current lesser margin. And if you look into their financial statement or income statement year over year, so they are growing pretty good. They are growing, their sales growth is 12% over 10 years and 17% CAGR for the past 5 years. So their revenue growth is pretty good, and also if you look at the margin, so in 2020 it's 15%, in 2021 it went up to 20%. So I'm expecting it to come back to 16 to 17% going ahead. And also if you look at their return on equity, they are doing about 26-28%. That's pretty good. And then if you look at their balance sheet, so if you look at their borrowings, they had historically they have about a few crores. For example, 300 crores in 2017, 248 crores in 2018, 160 crores in 2019, and 441 crores in 2020. And then they paid back all of their debts, or most of their debts. In 2021 they have only 27 crores as debt, so almost they are debt free from March 2021. If you look at their cash flow statement, so they are doing pretty good cash flow from operating activity. So the cash from operating activity in March 2021 was 1246 crore, and their investing activity, they did about 200 crores investment. And then if you look at their financial activity, you can almost see they paid back 500 crores in financial activity interest, and plus they also paid back some of their debt. So that's why their debt reduced in March 2021. And then they also have free cash flow of almost 542 crores in 2021. That's good, they are generating more free cash flow, so that's pretty good. It can be used to fund their capex, so that's pretty good. And then if you look at their profit after tax expectation of the analyst, so they have for example in financial 2022, most of the analysts are expecting our 930 crores, which is lesser than the previous year. And then if you look at the financial 2023, so most of the analysts are doing about 1037 crores to 1100 crores. And in financial 2024, so the average is around 1150 crores, and ICICI they had around about 1190 crores. And so it's somewhere between 1080 crore to 1180 crores. So somewhere in that ballpark as the analysts are expecting for financial 2022. So that's profit after tax. And also if you see in the bottom most chart, which is the ICICI direct securities analysts are expecting their profit margin to stay in that level. For example, if you see in the financial 2021, their margin increased huge, and then in the coming quarters or coming years their margin is going to be in the lower side, it almost reduced in the past quarters, and it's going to stay at the same level. It's not going back to their previous level. At least analyst was not expecting that, so we need to take that into account. And then if you look into their shareholding pattern, so the promoter holds at 50%, that's good. And then mutual funds are slightly increasing, so they are not buying much, but slightly increasing, that's good. And if you look at the FII, they increased their share in December 2021, so that's also good. And if you look at their different mutual fund holdings, Kotak Emerging Equity Scheme, they have stake, DSP Midcap Fund Growth, HDFC Midcap Opportunities, Axis Focus 25 Fund Growth, Axis Midcap, Kotak Small Cap Grow Company, and then DSP Equity, and then L&T Midcap Fund, IDFC, DSP Tax Saver, DSP Axis Growth, Kotak Equity Opportunities Fund. So there are a lot of mutual funds they are holding this company. So if you like HDFC Midcap, Axis Focused, Axis Midcap, they reduced slightly the shares in December 2021, but then most of them are holding the company, so that's good to see. And then if you look at the valuation of this particular company, so they were historically trading around 25 to 40, and in the March 2022 they came back to almost 10-15. It was a steal deal at that time, so most of the companies was trading very attractive in March 2020 corona crash, and then it went up. So currently it's trading at around 25-26 PE, which is the average of this particular company. It's not rich valuation, it's also not in the undervalued territory, so it's not overvalued territory, not undervalued territory, just in the average PE. So if you look at the PE, it's at the fair valuation, or the average PE it was trading at around. So if you look at their revenue projection, in 2021 they have 6,357 crores, in 2022 7,300 crores, in 2023 8,395 crores, and in 2024 9,654 crores. And then net income, I'm expecting to do about 950 crores in 2022, 1045 crores in 2023, and 1150 crores in 2024 because of the reduced EBITDA margin. If you calculate the price target with the average PE, which is 26, so in 1 year the price target would be 2,139 rupees, in 2 years 2,353 rupees, with the price cumulative growth of 6% and 17%. And if you look at the price target of PE of 30, because it's average PE, it can come and higher if they do good revenue and net income growth. So I'm estimating the price target with the PE of 30, then in that case it's 2,469 rupees and 2,715 rupees, with the price cumulative growth of 22% for 1 year and 35% for 2 years. So that's the growth expectations. So personally, I would say it's a very good company. It's in the very good sector segment. It's a growing segment. So if infrastructure is going to do well, then this company is also going to do well. But then the main concern is it is having a higher base in 2021. As I said, it had a higher EBITDA margin, and their EBITDA margin is going to go down, and then it just already came down in this year, and it's going to stay at this level. So if you look at the bottom line growth, it will be limited for the 1 or 2 years, and then it can pick up. So for the long term, I think this company is good buy, because it also came down 25% and is trading at the average. So personally, I would say it's not a overvalued stock, and it's also not a hugely undervalued stock. It's trading at around fair value. So if you want to accumulate for the long term, yes, you can buy this company. It's a very good company, but it's also not in a steal deal stocks. Overall, it's a very good company. So that's my personal opinion. You have contradicting thoughts, so it's not a financial advice, it's my personal opinion. So that's all for today, and if you like this video, like, share and comment, and if you are new to this channel, please subscribe this channel and also press the bell icon. And also, if you would like to receive free newsletter from me, so please subscribe to the free newsletter in the description below. Thank you for watching and have a nice day. Bye bye.